Good morning. Welcome to Admiral Markets. My name is Chris. Thanks for joining in today's strategy webinar. And we're going to take a look also, of course, at the markets and price action. Before we do that, though, be aware that today the video is shown to a global audience but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, be aware that trading for exchange at global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Plus, you are aware of the risk involved when trading. As you've already heard several times from my side, during April and May, there's the opportunity to get a deposit bonus up to 50%. Take a look at admiralmarkets.com to find out more about the details and conditions and see if that's for you. It's definitely something I think you want to check out. So after the webinar, you can take a look and see if it's something that you like. All right, with that said, let's take a look again, as always, at the calendar. I think there's big pound news coming up. Today we have, I believe, oh, it's not today. Maybe I'm getting confused, but we have some industrial production, manufacturing production. Those are, of course, still big news for the pound at the usual 9:30 a.m. UK time. But I thought there was some interest rate. Maybe that's tomorrow. Maybe I got it confused by a day. I'll double check that. But anyhow, throughout the day, we got some medium, as you can see, some yellow marked and green marked news events that you should be aware of. Let's take a look at the heat map, and we see the cats are up. Always a funny abbreviation for Caterpillar. I have cats, so for me that's funny. But anyhow, currency pairs. Let's take a look at the Aussie moving big, as you can see. Pound New Zealand, basically a lot of volatility, but no much directional movement. Odd yen though, CAD yen, pound yen above the 1%. So those are the big movers. Odd Swissy 2. New Zealand the biggest one, pound second, dollar last. Wow, look at that. I mean, it was always second to third last few months. Now it's slipped back to all the way at the last position. Dollar really in a tight position, and if you look at the euro dollar and pound dollar, that would make a lot of sense because you see, indeed, these two currency pairs, because these two are really stuck in a very tight triangles and channels, really not moving that much this week. So, all right, let's take a look. Oh, I wanted to let you know, by the way, about the Traders blog. Top 6 skills that can boost your Forex trading. Nanette wrote that. Take a look, of course, if you like. Also, small promotion for Admiral Markets. We got a lot of analysis, not only wave analysis, but fundamental technical. So take a look at that as well. And a lot of articles too, just in case you're curious here. You can see different topics that might be interesting for you. You can go to education and articles and tutorials. And so there's a lot of things to discover here. Today, again, I wanted to focus, just like last week, on wave analysis for a second time, and then switch to next week to a new topic, because I know that not everyone is a fan, but I wanted to do a duo back-to-back sessions on waves, and then we'll move on to a new topic. Maybe in the future we can do waves again. Up to you. If you have any moment in time in the future that you say, boy, I would like to go back into those waves, just let me know. And you can always write me or send a chat through these webinars. Regarding the wave analysis today, I think that we're seeing basically on the euro dollar, it's either an ABC corrections or 1, 2, 3. It all depends how price will break these trend lines. So these are the lines in the sand, these trend lines. The green for support, the red obviously for resistance. And those are my markers. Those are my decision spots, right? Once price breaks through those, it will convey information to me about what wave count is the most likely. At this moment, as things stand, I think an ABC probably is the most likely. But obviously, if price starts to break through the support levels, right, and starts to go, well, it have to basically break at least below the 100% level of the fib, because a wave 1, 2, 3 the third is often extended, right? It has to be the biggest wave. The third is never the shortest. That's a rule in Elliott wave theory, and hence it has to at least go to 100%. If it doesn't go to 100%, at the very minimum, it is not a 1, 2, 3, right? And it's an ABC without any doubt. If it reaches the 100%, it could be a 3, but it's still more likely an ABC, because often in ABC corrections, the A is equal to the C. Sounds like a math class almost at the moment, but I promise I won't throw any equations at you anymore. But this is often the case with wave analysis. A is equal to C. So if it reaches 200%, then A is equal to C, and that would be typical for an ABC, not so much for a 1, 2, 3. That balance slowly but surely starts to change once you get down to lower fibs, right? Once you get down to 161.8, and even further, 261.8, 423.6, right? These wave threes can extend very, very far. So from that point of view, it's kind of like, I would give it indicated by boxes, right? The red box here, then we know for sure it's an ABC. Anything between 100 and 161.8, it's kind of like, could be ABC or could be 1, 2, 3, depends on circumstances. Could be both. Anything that extends beyond 1618 is most likely wave 3. Now, there are some exceptions still that could make it an ABC, but in general, vast majority, just let's say everything, just to make it simplified, is a 1, 2, 3. So it all depends, like if price breaks, how far will it go to these targets? But all of these targets could be bouncing spots, and it depends on how aggressive trader we are, which targets we like, and maybe a split target is good. Scaling out, aiming a part of the trade at 100, part of the trade at 161.8, part of the trade perhaps even further, right? So, but in any case, these are the main kind of levels to think about. 112.50, even a 111, what is it? No, 110.70 and 111. And no, I'm looking at these numbers wrong. Sorry, let's see. A bit confused now. This is 80. Okay. 112.50, 111.75, 111, 110, etc. Now, if price breaks above this resistance, well, this is still an uptrend. There's a clear support trend line. Price would be respecting that support trend line and breaking above resistance. So all that this could be is an ABC correction completed at a trend line. And if we start breaking the counter trend line, this resistance, those two resistance trend lines actually, just like we did here and here and here and here perhaps, right? Well, then there could be breakouts to the upside. And this could be just a continuation. This could be a retracement. We had a zigzag here. This could be a break, pullback, and continue up to maybe 117, the next resistance level. Very possible. So I think it's good to be flexible. I think wave analysis is not something that, it is not a method that says this must be it, right? It's a very flexible approach. That's why I think traders don't like it, because it requires adjustments. It requires us to be quick on our feet, a bit like maybe like a boxer in a way. You have to be quick on your feet, right? And many people in general, I think, and traders like to stick to their kind of position, stick to their view, think that if you change that somehow, that's bad, or but in wave analysis, you can't hang on to something that's outdated, and you gotta be flexible and adjustable to what's going on and the new information you're getting. So from that point of view, that I think that's why wave analysis is not good for everyone. It just doesn't suit them somehow in their flexibility level. I also think that maybe they take it. You can use it very specifically for trading purposes and trading decisions, but it's a bit more difficult, and you can get caught in some traps there. You got to have some experience for that. I think If you're starting out, it's much better to use it as a guideline about what, to analyze decision zones and get a bit of a market structure read and do the analysis. But in real trading decisions, you might want to use other things like candlestick patterns and chart patterns and trendline breaks and moving averages and oscillators, right? So that's, I think you could split that process into analysis and trading decisions. All right. So, but the any case, let's go down to the hourly, and we can see this is this is a channel, right? This is a channel going slightly to the downside, and it all depends what way would that channel break. Yesterday we had just an up down day. We had a heartbeat day. We had price went up, down, didn't go anywhere, right? Up, down, up, down. This is where it opened. This is where it closed, and it did nothing. Went sideways. Dollar, as we see in the heat map, went nowhere. So, and the euro dollar is just a testament to that. So, if we look for a breakout, maybe below this trend line, I don't have it drawn here, but let me make that blue actually. It's a bit more logical, right? Price breaks below the blue. Sorry about that. There we go. And below the channel, in fact, as well, then price could go up down to the wave C. But there could be even a chance of a 1, 2, 3, 4, 5 extension for C. Or, as I said, maybe not ABC, but 1, 2, 3. Who knows? But let's put that aside. We don't know that for the moment, right? That put aside, if we get a break to the downside, we could see at least some extension down to the 100% level here. So that's about to 112.50. So that blue box there, that's the first kind of zone we can think about for downside. If price does break to the upside, then this 1, 2 is out of the window. Forget that. It's not relevant. It's invalidated. Something else is going on, and probably that blue C ended up somewhere here. And this could happen. So pound dollar, and by the way, we have that news event tomorrow, not today. It is happening. It's the interest rate basically expected to stay on 0.5. I don't think there'll be any changes on that. But there's also a Bank of England inflation report, monetary policy statement, official bank rate votes, and the Bank of England governor speaking as well. So there's a lot of stuff on the pound tomorrow. From a 4-hour perspective, you can see the same support trend line coming in here and kind of stuck between long-term support and short-term resistance. Is this, a retracement for more upside, or is this basically the reversal? No, not a, sorry. Basically, let me reformulate that. Is this on the pound USD a retracement for upside or a bigger retrace? No, I'm still getting it wrong. Is this a retracement for a bullish trend continuation? Point 1. Point 2. Is this a start of a reversal? Point 3. Is this just an ABC retracement for like a bigger correction? 3 scenarios basically, right? And the measurements, the break of the resistance lines make an uptrend continuation a bit more likely. But we would actually need to break above this red line for a real strong trend, okay? Right there. Because this could still be a bouncing spot. Okay. Downside, basically, the break of the first green line could be the ABC correction. The break of the second green line could mean a reversal. And it also ties into the fibs. Look at where the fibs are. 100% level right here. What did I say about 1, 2, 3 versus ABC? Anything below, or sorry, above in this case, 100% is an ABC. So that 100 fib level ties exactly into that trend line. So price would definitely need to break below this trend line and the 100% level to be a reversal. If it stays in this zone where I have the blue circle, it is for the moment still an ABC. All right, so that's basically a confluence between the trend lines and fibs. Very nicely, I think, how that ties together. So the hourly chart, we got the same stuff basically as the pound USD, as the euro USD. Do we get the break to the downside or do we get the break to the upside? Price didn't move anywhere yesterday, just like the euro. Dollar yen reached the 161.8 target. So here, again, the question begs, is this an ABC or a 1 to 3? Now, as we know, if price gets up to the 161.8, anything between 100 and 161.8, it can be both. But the balance is slightly tilting maybe to the 1 2 3. Now, an ABC, a C could definitely go up to 161.8. So it's basically a 50-50. It all depends on lower time frames. For the moment, it could be both an ABC 1 2 3. Now, the difference is important because if it is a 1 2 3, we can expect more upside. If it is an ABC, we would expect that this correction is over. So we would expect downside and eventually trendline break for downtrend continuation. If it is a 1 2 3, then we would expect price to turn and continue to challenge this resistance. So let's take a look at that lower time frame and see what that says. Lower time frames basically at the moment, the key level I think is this 38.2 fib. Because if that holds, it could be easily a 1 2 3 4 5 within 3 basically. If it doesn't, then it just increases the likelihood of an ABC. So with that said, those are the wave analysis on the majors. If you're looking for that deposit bonus, by the way, you can find a way to reach that by clicking on this banner, and you'll go to the main site, and you can see what kind of bonus you get with this slider. So let's see what the live charts are saying. This wave analysis was done, I don't know, 2 hours ago or so, 1.5 hours ago. I was a bit later than usual. So let's take a look what happened in the meantime. Let me pull over the charts. If you have any questions, of course, just let me know. Feel free to ask. And not much really happened. Price showed some upside perhaps here. Small 1 hour candles. If you zoom in like this, they look gigantic. Well, not gigantic, but they look decent size. But if you do like this, you hardly see them. It's funny how that you can make it relative. If you want a decent reading, use a view where you see preferably between around 150 bars, 200 bars. Now we're showing 250. This angle is showing 128. So either this angle or this angle, probably the best. I like this one. I like to see the candles just a tad smaller to see more market structure. I somehow am just curious about what I see. I feel like I'm missing some information. But everyone has their own preference. I think there are plenty of traders who would rather look at the chart like this and see less of the past and focus more on current history. I like to see this, as you probably have noticed. But if we use this, then you can see that we're in this channel and price has not broken out to any of these sites. So that would be the first step at the very minimum. All right. So, and yeah, moving back to this time frame, and you get a bit more information. This also becomes a resistance line, just like we have on the wave analysis chart, right? So let's take a look at some other time frames. And we are the long-term moving average, so perhaps this is bottoming out. We have a bit of divergence between these bottoms too, although we hit the long-term moving average here, so that's irrelevant at the moment. We do have double divergence on the daily chart. That's important. If you have double divergence on the daily chart, that's a heavy signal. That's really a lot of info there. And from that point of view, downside to at least this long-term moving average at about 111.75 seems logical. So at the very minimum, I would expect an ABC at this moment. That does seem the most likely. One of the reasons too why the wave analysis is showing ABC or 1 2 3. That does not mean that it has to fall in one shot. It could actually give a hook back before falling, show weakness, All right, if you look at my time factor rule, 5 to 6 days not breaking this high would indicate weakness. We're on day 1, 2, 3, 4, 5, 6. So at this moment, based on that, if we break these resistance trend lines, I would put a fib from top to bottom, and I'm expecting price to rally up to one of these fibs, but then I would expect price to turn around and make that fall at the 61.8 or 78.6 fib, down to, let's see, down to the long-term moving average. That is equal to roughly the 61.8 target at 112. So, that's what I would be expecting, basically, like that. All right, if we break those resistance trend lines. If we don't, and if we break support, then obviously we could continue with the momentum to the downside. All right, so this is just my roadmap at the moment. You got the blue potential there, the blue arrow. Once the short-term resistance trend lines are out of the way, you got the red boxes. Once price breaks below support, that's intraday trading because it's tight, small zones, 70 pips, 80 pips. And you got the red arrow as well once price gets back into the resistance at those fibs. Excuse me. So that's it, basically, from my side. I mean, obviously, you got a strong weekly candle as well. So if it does get up to halfway, it will retrace that big weekly pin bar as well, bearish pin bar, strong reversal signal in this case. Always a strong reversal, but there's an additional kind of support that we have. First of all, a bit of a channel that makes actually a pin bar stronger. We got strong resistance here, another factor that makes it stronger. Plus, we had momentum here. So there are a lot of reasons to say that this pin bar is not only a good pin bar, but it's a pin bar that's in a good position. It happens, it's occurring at a good spot, I think. So it's twofold. So let's take a look at the pound. And we got a bit of an ABC probably, choppiness yesterday, bit of upside. There was divergence, I think, hopefully we did mention it. That pushed price up to the long-term moving average, choppy upside though, and basically going sideways like this. So, there's kind of a channel within the channel. There's this slightly bullish angle channel within this bearish angle channel. So which one is it going to break? At the moment, I'm waiting. Probably the exact same analysis that's valid on the euro is valid for the pound, really. If it breaks, we could have this downside. If it breaks to the downside, if it breaks to the upside, we could have this rally up to the resistance zone, which could be a turning spot again. Same fib could be placed from top to bottom. Dollar yen. Let me put that fib on for the wave 3. There we go. Price still respecting the 38.2 fib. In fact, there's a pin bar. There's a bullish pin bar, a bit of a wick, a close, not too far from the high, a close above the close of the previous candle, right at the 38.2 fib. So that could be a decent price action reaction to a fib like that. So, from that point of view, I don't think it's anything wrong with going long right now, actually. There could be a stop loss with two scenarios, with a tight one below that pin bar, or below the 50 fib, because the 50 fib is only about 40 pips away, and 50 pips, let's say. Well, it's 40 pips away, but I would go to 108.20, so that's 50 pips away. And the 50 fib, there's a supply demand zone here, so I don't expect price to push through that, plus a 50 fib. So there's less risk involved. There is a bit of bearishness here, so price could still kind of just, even if it tags 5 pips below it and then closes and goes up. This happens so often. I like typically I'll do like a bit more spacious stop losses. I think that makes the most sense in this case, primarily, in fact, due to that supply demand zone right there on the left. Another way to do it would be, does the 50-minute chart uh, fail to break this low? Basically, on the 50-minute chart, we've had bearish momentum. But we know, of course, looking at higher time frames, that there's a fib that could stop it. One way of measuring that would be looking at time factor on this time frame and saying, okay, 5 to 6 candles not breaking the most recent low could indicate indeed the completion of this downside. Now, that doesn't work always. As you can see, here are 5 to 6 candles that didn't break this low, yet we still got a lower low, right? So it's something we want to use at good spots, at spots where we see strong support levels, not at places where we don't see confluence. Then you want to be careful. And in this case, price did make a lower low after 14 candles. Also, mind you that the 5 to 6 candle rule indicates that it will take 13 candles before the continuation happens. And actually, if you count the bars, it was the 14th bar that broke this low. So after 5 to 6 candles, somewhere in here, we basically, once that happens, there are two scenarios. Either we get the reversal, or we get the breakout lower, but typically it happens 7 bars later or more. So that happened indeed. Maybe this is complicated. If so, set that aside for a second or ask a follow-up question. But in any case, we got 1, 2, 3, 4. So a couple more candles. We can review this dollar yen again at 33 minutes from now and see where price is in relationship to this low. But to zoom out, basically, all we're trying to investigate or decide is, will this indeed be a bouncing spot? Will the 38.2 fib be a bouncing spot? For upside continuation, will the 50 be a bouncing spot? Or is it going to break down? Well, that's hanging in the air, to be honest, because it all depends if this is an ABC, right, as we said, or a 1, 2, 3. Now, this is strong momentum. So from that perspective, maybe waiting for the 50-minute charts is a bit better. I do think that this is a decent supply demand zone, so I do think that we'll get a bit of a bounce here. And then in that case, it's good to use a tight trail stop just in case it does turn around like this. Hopefully, it will just keep going. All right. So I think that this is a strong chance of a bounce, either to 38 or to 50. And I think a stop loss below the 50 is the safest way to go, with a target at 110, 109.90. But more confirmation could be received via this 50-minute chart that would indicate if we get a bounce here or at the 50 fib. Alrighty. Let's see. Aussie did not do much yesterday. It kind of made a rally. As expected, we were, I think, let me take a look at the 1-hour chart here. Yeah, price was yesterday when we looked at the chart, it was about here indeed. So yeah, it went nowhere. It kind of made a bit of upside as expected, that we're going to get the retracement to some divergence, etc. And it did that. It didn't get to the long-term moving average, so that could still happen. I was actually hoping for price to get up into here, a bit higher into the resistance zone, but that has not happened yet. It's taking its time. And in fact, at this very moment, I think big retracement is likely. I think we do see a potential inverted head and shoulders. The neckline of that would be somewhere around here. Got a couple of trend lines. It's more like a zone. Break of that trend line would be the break of the neckline. Now, that might not happen. That might be difficult to trade, but if it breaks, then I think we got some small space up to this supply demand zone, which is a strong resistance spot. That's something to really be careful of for downside, I think. If we don't get there and price just breaks lower, we can see that, from this point of view, we're obviously in a downtrend still. So there could be an inverted, there could be a head and shoulders here, in fact, as well, right? With this as a neckline, and it looks like it could break. So is that an interesting trade? Perhaps. Let's take a look. I'm a bit skeptical because of the divergence, but it is a single. It's a single here, and we had some retracement already. So these are kind of like difficult things to balance in a way. There's no exact science on these things. You know, ideally, I would like price because of the divergence to get back to the long-term moving average. That's when I feel that that's what the rule states, that the divergence is over. It's not has doesn't ha- should not have any impact on the charts anymore. It failed to get there, so that divergence is still a factor. However, single divergence is on an hourly chart not very strong. Uh, I would go to a 4-hour chart or higher to say single divergence is strong. Hourly or lower, I prefer double divergence. So how do you balance those things? Well, I think it all depends on your risk appetite. What trades are available over the entire market day or market week? If there's other things that are more interesting, go for those. If there's really nothing, then this might be worth it. I think it all depends. I think that when I'm looking at multiple currency pairs, I'm looking for the ones that have the best setup. So this is okay-ish, perhaps, right? The breakout to the downside, but there could be better ones. I wouldn't be surprised if there are better ones. If it does break the target, 72.50, 72.75. You got these support levels here. The minus under target as well. All right. Very choppy price action here on pound odd as well. We got double top. Um, I'm trying to recall what I analyzed yesterday regarding pound odd, but I think it was that price could go back to support. Does anyone remember, or was anyone here yesterday? But that's my hunch. I'm not 100% certain. Anyhow, it did, and if that's the case, it did, and bounced. So we're getting a bit of a reaction here. A follow through on that could be a break of this trend line. Getting a triangle like this. Now that we reached the target, I will move the fib to the most recent swing high, swing low. There we go. All right, price respecting 38.2 fib at the moment. So good 4-hour candle here as well. 1, 2, 3, 4, 5, 6, 7 candles. That's a bit worrying from this point of view. So this could be a correction candle, although it's bullish and although it looks strong. If we look at the bigger piece here, it could be corrective. Also, we're at long-term moving average here, so this changes things. Yeah, this changes things. I think that from this point of view, let's see. All right, if price continues to go sideways, it's starting to become a supply-demand zone, which could break to the upside. If it breaks these long-term support levels, we could see a bigger correction. But if it breaks these internal resistance lines, we could be setting up for a breakout indeed. So I wouldn't take it. I wouldn't take it in this box here. I think that's too risky, personally. But I mean, there is reason to go long because there's a lot of support. We're in an uptrend, and there's a 4-hour candle. So from that perspective, it makes sense. I'm just cautious about the fact that basically prices have gone sideways for so long, and I don't want to overrate this candlestick, basically. So I would keep an eye on those trend lines. Let's take a look at others. Euro pound going nowhere. Alrighty, Kiwi making a bit of a pullback. All right, yesterday I had a wick, as you can see, that caused already price to move up, and it's bouncing off support levels. It's bouncing off moving average. This could be a hook back to the broken support, to the broken trend lines for a continuation down. Or this channel is broken, but this could be an underthrow. Sometimes channels get broken, but price kind of reverts back into them and continues in the uptrend. Sometimes kind of price expands or kind of goes beyond those levels, but doesn't result in a trend change or reversal. So this remains unclear on the Kiwi dollar. It could be both, and that's why it's going to be critical to see how price responds to the trend lines up in here. I would say to the 50 fib as well. Anywhere between the 38 and the 50 fib zone. Is that a turning spot, or will price just make a bit of a bounce and then keep pushing? So looking for shorts up there, I think makes sense. In that zone, in these fibs, and looking for a potential breakout there could make sense where we have the blue arrow, and looking for a potential breakout below this red as well. So those are kind of the future setups that are possible. For the moment, though, the ideas I have is either going along up to the resistance or taking a short at the resistance, right? Those are the near-term kind of potentials. If we look at this upside, there's a good momentum. So zooming into the hourly chart, we see, 4-hour chart I want to add, by the way, 1, 2, 3, 4, 5 candles not breaking this low. So this momentum could be over soon. And from that perspective, I wouldn't be surprised to see a pullback and continue up to that 50 fib. So from that point of view, looking at the 15-minute chart, I think a potential trade could be, when putting a fib on this first move up, a bounce at the 61.8, for instance. Right? We could get a zigzag like this, and then a bounce at the fib for upside. So I'm going to keep an eye on 67.50, 67.60. I think that could be a bullish trade. That's a reversal trade. It is against the momentum. Why? Because obviously, when you look at the 4-hour chart, price is moving lower. It's definitely a reversal trade, but it's a reversal trade that I think makes sense. And as I said, I'm always cautious with reversals. I want more evidence. I want more confirmation. I'm more critical towards those trades, but I think this one passes the bar. This one passes what I want to see for a reversal. So now the target would be 68.40 or 68.80. Those are the 38.2 fibs and 50 fibs, right? So, which in turn could be potential entries for the opposite side, right? But that's something we'll see when it gets there. I want to see price reaction to it. I want to see candlestick pattern at those fibs. Also, targets are nearby as well, the minus 272 to minus 61.8. Because if it doesn't show any candlestick patterns, price could just be on its march up, and there could be a lot of momentum, and it could just pause temporarily there, slightly, and push forward. All right, now pending orders. I'm not a big fan of pending orders with reversals, but this one might be okay. I think the other option I want to say is, of course, waiting for candlestick patterns here too. Or, and there's always some things we can do. For instance, wait for price to get here. Wait for price to get to the 61.8. Go to the 5-minute chart. Wait for 5 to 6 candles, not breaking the low that hits the 61.8. And take an entry there or take an entry on the pullback. A third or fourth option in the meantime could be the break, take the break of the fractal. The fractal after the first leg. So you get, let's say we get the correction to the 61.8. We get the first bounce. We get the first pullback after the first bounce. Then we get the continuation after the first retracement. The break of this fractal, of this high, could be an entry too. Because in that case, it's breaking to a higher high. We know that. The price has a lower high. We know that. So basically, that's a double confirmation that the momentum to the downside is over. And in fact, we are starting to the upside. Now, on a 5-minute chart, you might think why, or first of all, you might think why would we be taking the break of a high? Isn't that a bad entry? But we are looking at a 5-minute chart. So this is a trigger chart. It's a trigger time frame. So in that case, it's not a bad idea, right? Because it's a small time frame, so we're looking at small sizes. This first push up, we're looking at a potential move of 25 pips, right? So if we take the break above the first high here and put the stop loss below the low here, you're looking at a stop loss of 30 or something. It's not something very out of this world. So yeah, the fractal break could be very, very good option as well. Obviously, you got resistance up in here, and that's always dangerous when you take a break. And normally I would not advocate for that, but in this case it's different because we're looking for a bounce off the 61.8 and consider the momentum divergence. If we get the bounce at the 61.8, there's a good chance of getting up in here. Now, getting up to here, right? To these fibs, as I said. Now, if it shows struggle, if it does bounce, let's say, and it shows struggle up in here at the previous resistance. All right, let's go back to the 5-minute chart. So let's say we get that. The downside, we get the upside, we get the downside, we get the upside, and then it shows struggle here, and it kind of shows, does this. Momentum, and then followed by a bear flag. That is information that I would use for trade management decisions to say, okay, this trade is not going the way I wanted to. I'm moving my trail to break even, to below the nearest bottom, or maybe even taking a market exit. If price, however, continues up from the 61.8 and just shows some pause, but not necessarily any bearish momentum, I think that's a positive sign. What I would do is probably move it to break even though, but I wouldn't exit, market exit. I wouldn't tighten the stop loss very tight. I would give it the space that it needs to develop. But I would probably move to break even. So that's some trade management kind of ideas that depend on how price moves after that. So entry ideas, though, pending order, the pullback after enough time frame, after enough time factor, candlestick pattern, break of fractal, candlestick pattern at the bounce. The thing is you can combine all of these ideas and find the one that you think is the most interesting, feels the most comfortable for you. But you can, in a way, infinitively combine candles and bounce and break spots, um, bounce, break, pullback, continuation, candlestick patterns, fractals, for many, many different kind of ways of analyzing triggers and entries. The trigger would be, okay, I want price to do this, and then I'll look for an entry. So the trigger in this case, if you're looking for a candlestick pattern at the 61.8 fib on the hourly chart, then the trigger is when price gets to the 61.8. The candlestick pattern is the entry. If we are looking for a pullback, bounce, pullback, break, we're looking to take the fractal break, our trigger could be when we get a lower high here. Sorry, a higher low. I always get those mixed up. That's our trigger. The entry would actually be the break. So you can play around with these, triggers, and you can have multiple triggers. You might want to see two things happen. Now, on the euro yen and pound yen, I think that there are a lot of ways of looking at this. First of all, it's important to note that there is divergence, that there's multiple divergence. There's a minimum and double. Well, maybe I shouldn't count this bottom. So let's just take a look at the recent bottoms. Okay, let's say a single to be on the conservative side, but a single divergence on a daily chart is a serious thing to consider. We got a bit slight of a falling wedge, as we said yesterday. One could even talk about perhaps a weekly divergence between these bottoms. Obviously, this is, in my opinion, obvious this is looking corrective compared to this fall. So downside having some struggle here. With that said, though, price is definitely still in a downtrend channel. Let's draw it. Let's put it on the chart. Let me make that a different color. Let me make that purple. I like this channel because it doesn't capture these bottoms all too well, I know. But we have a good number of hits here, and sometimes you do get just a bit of overthrows. I think the heart line, the middle line is well respected. You got price stopping here and here nicely, here and here. It's not everywhere, right? But it does a decent job, I think. So I think this is a good trend channel. We're looking at the euro yen, by the way, once again. Got a good couple of daily candles. This is the lowest low. So I think if this current trading week price does not break this bottom, and it kind of like makes a bit of a hook back like this, I think it could be very well set up for a reversal trade, for a move up back to the top of the channel. Well, first of all, up to here, but then after it breaks up to here. I'm talking about the blue circle and then the green circle. First up to the blue circle, then up to the green circle. Now, is it a good moment to go long right now? I don't think so because, well, I'm not saying it couldn't push up to the top of that, to the middle of the channel and to the top of this resistance. It could. So that could be still worth it to see if there's a potential continuation there before it makes a pullback and then breaks to the upside again, probably. But it could also make the pullback right now. So let's dive into that. In general, though, I think you get the impression, of course, hopefully the impression is clear, that I think this downside is going to run into trouble, and I think we will see a retracement here. Back to the top of that channel. Or that's what the charts are saying at the moment. I think that's, to be precise in my formulations of what I'm saying, that's what I think is the most likely path of the least resistance. All right, now hopefully that's not confusing. So is there a chance to get up to that resistance zone? That's kind of like the question I would say for intraday trading today. And is it likely and is it interesting compared to other setups? And that's something we'll also discuss at the end of the webinar. After I looked at a decent amount of pairs, we'll compare the setups and then see which ones I think have kind of the most interesting potential. So looking at the euro yen, it's kind of the same situation I would say as the dollar yen. Made a bit of downside retracement here, back to a fib. But is it going to be this fib or perhaps the next fib or a breakout? So looking at this, the 38.2 fib looks pretty sweet. Got a bottom here. You had momentum here. You could have an ABC zigzag down to that fib. 123.30. If it would get that low, that would seem good. You got some tops in here as well. So that could be a bouncing spot up to this resistance and then down again and then up again. That might seem like a lot of ups and downs, but you know how price sometimes moves. Could that happen? Well, it certainly wouldn't be the first time. Now, if it doesn't bounce at the 38.2 fib, then it depends. Then I wouldn't trade it to the downside. I would wait for the end of this week to see if it fails to break this bottom. Then next week, I think that these fibs are valuable. These lower fibs are valuable too. All right, let's see. Pound yen. A bit different. I mean, we still have that the divergence. We still didn't reach the target actually. So this could be an A, this could be the B, this could be a C. So there could be an ABC zigzag there. Then again, we are in a downtrend. Plus, we already had a sturdy correction. I am probably thinking that the upside ABC correction is more likely as well. However, that would entail that price should not break below this support trend line. And price should then therefore kind of maybe make some downside correction here, but ultimately bounce and make a rally. So from that perspective, I'm also more interested in longs probably. But from this perspective, let's see. We have a supply demand zone down in here. That could be an interesting spot. Or if that breaks eventually, let's put a fib from here to here. Then probably the 78.6 fib is the best. So let's see. 38.2 or the 78.6. You're in New Zealand daily at resistance. The triangle broke, but it didn't break anywhere significant. It's just going sideways. Actually, we can easily adjust that like this, and I would take it away like that. Yeah. So if you're a range trader and you're looking for support or resistance to trade in the opposite direction, then this wick could have been something for you. Otherwise, I don't see much. Pound New Zealand, if you're interested in this indicator or any questions on waves, you can always do that by sending me an email to this email address, and I will get back to you on that question or indicator if you're looking for that. Regarding the Pound New Zealand daily, I don't see any trades I like at this moment. Let me change this template. This is the AcuPP template that Nenad created, and he is doing very well with that, and therefore offering a free trial for you to test that same. So you can use the same email address that I just showed, and I'll set you up for a trial if you want to use that. Anyhow, back to our usual template. Odd yen. I would think is setting up for a bigger zigzag correction here. Here too, same story with the yens, basically looking for a zigzag, I would say. But the odd yen, I don't know, may not be the best one, but kind of the same story there. Pound CAD didn't go anywhere. And sometimes, if there's not a clear trend, there's nothing wrong with skipping it. I mean, this is, even if we stretch it like this, we cannot see any kind of trend here at this moment. I mean, you can look at it. I would just draw trend lines and be patient with this one because there's nothing really of a structure here at this point. I mean, you had an upside that got broken, then you got a downside that got broken. You had a downside here that was already broken, uh, upside here. So the downtrend was here really. That's where the trend was, right? That was a good downtrend. The breakout could have been interesting maybe, but at this moment, I think it doesn't show any particular direction. Could be up, could be a bullish break, but this could be weakness too. There is divergence, you see, so it's a mixed bag. All right, so maybe a few minutes. Does anyone have a particular currency pair you would like to still look again or look for the first time, or any setup that you would like to discuss that you're already in or would like to take, or that want to trade manage, or you want my opinion on something? Just let me know. In the meantime, I'll take a look at the DAX here. Yeah, I think it's also kind of coin flip here, to be honest. There's so many ups and downs. There's not really a clear trend at this moment. We have a trend channel to the upside, but there's divergence between these tops. So there's downtrend here. So there's too much conflicting information, I would say, on the DAX. It could bounce up, but find weakness, then break, move down to support, then bounce up. I think there are too many scenarios that could happen that really don't make it that interesting. This could be 5 waves down. So this could be an ABC, but the ABC hasn't finished yet, right? Or the ABC maybe finished. And this is indeed continuation lower. So if anything, might keep an eye, I don't know, on deep fibs like the 78.6 fib. This could be breakout territory here between the 50 and 61 and the 61 and 78 fib. If price does manage to break below these support levels, that could be the breakout down. But I'm not really jumping for joy, as you can see, when analyzing DAX. Let's see daily oil. I wouldn't be surprised to see a bit of retracement to the downside. Divergence between these tops. But I don't trade it, so I'm only giving just general analysis here. All right, anyhow, I don't think there's anything really significant from my point of view. Anything important to discuss compared to yesterday. So let's maybe wrap it up. Let's make a summary today. Do you have any questions on the wave analysis? Of course, as well. Let me know. We just started with wave analysis. I do it on the 3 majors. On the others, I really didn't dive into it that much actually. But if you have questions, by all means, let me know. Wave analysis would be interesting to see how that pans out with the dollar yen. Oh yeah, we promised 3 minutes ago that 5th candle, right, closed. So we're going to take a look at that. So 1, 2, 3, 4, 5, 6. 6 candles not breaking this low. We didn't have a lower low. This is, I would say, a double bottom. I could take a look just to be sure, but to me that looks pretty clear. Low is 108.55.6. Low here is 108.55.5. Yes, double bottom, right? Didn't break for a lower low, even by a tenth of a pip. So I think that this could be a bouncing spot. That this is a decent long with the stop loss below the double bottom on the 50-minute chart, mind you, or a stop loss below there. I think the wider one makes a bit is less risky with the target at 109.90. So probably that is the best, I would say, setup at the moment. I would think. Only worrying thing is there's a 5 wave down. So as I said, if it shows any struggle here, too much struggle there, then and it's showing an ABC up instead of a 1, 2, 3 move up, then well, then it could be more bearish actually. Then you got to trail stop this setup, in my opinion, because the risk would then be too high that there could be a turnaround here. The alternative, as I already said in the other example, would be a break of the fractal. Whereas the fractal, at this moment, it's up in here. After 1 minute, it could be up in here because 2 candles need to be closed, right? Let me add the fractals. Okay, there we go. So we got 2 closed candles below the low. That's what we need for a confirmed fractal. Just because there's 1 candle closed, right, that does not confirm a fractal, we need, or just because we have 2 candles below it is not enough, we need 2 closed candles. Now we do have 2 closed candles, so another option, maybe even safer, there seems to be a bit of downside here at the moment, but that doesn't mean everything either. If you look at it from a counter perspective, it could be a ascending wedge. Now those could break to both sides, right? And that's why I think a stop loss below the 50 fib is safer, as I already said before, several times. Just because it can dip and then even break or do like this. As actually price is now proving right at this very moment. So a safer way for tackling it could be the break of the fractal right here, or the break of the fractal and trend line right here, 108.80, 108.72. Those could be pending orders for upside, or the 50 fib still. All right, we just got a lower low, so the time factor rule unfortunately not helping. Let's take a look if I forgot something. 1, 2, 3, 4, 5, 6. Now it is 6 candles. Well, sometimes I have to say that the dollar yen is one of the pairs that breaks the rule of time the most. So unfortunately that is the case here. The 7th candle breaking the low right now. So let's see if it gets a bounce at the 50 fib, or if it breaks the fractals on the 5-minute chart. All right, so that's something to look at. Pound USD and Euro USD, not that interesting, but the trend lines are interesting. So those could be setups or currency pairs to look at. Aussie 2, Euro Yen, perhaps 38.2 fib, same like Pound Yen, but I want to see a bounce because just like the dollar yen. Kiwi to 61.8, reversal trade though. I think that's about it, really. All right, folks. Well, we got tonight more webinars. We have for you. I don't seem to have that tab open. So let me go there. Just go to education, click on webinars, and we will have tonight's Nenet's Heikinashi multiple time frame TPS webinar. Tomorrow we'll take a look at fundamentals. And I think that's going to be an important one for the rest of the year. Kind of long-term fundamentals. Might we see what aspects could impact that as well? How could that change or develop? And then next week we got the same setup. We got Netted with his recap setups here on Monday. Then we got Tuesday, Wednesday, my webinars, and Netted has trading fakeouts. And on Thursday we have advanced methods for trading markets with support and resistance. So thank you so much, folks, and wish you great trading, and talk to you soon. Cheers.